look at some of our favorite spreading strategies. So for that, we will look at Tesla, which is one of our favorite stock. So right now it's September 17th. As you can see here, we are on Think on Swim on Demand platform. So let's look at the chart of Tesla. As you can see here, Tesla volatility is increasing around this time. So as the volatility is increasing, one of the favorite strategies to sell some premium. So with that, let's see what we can sell for Tesla. Um, from a time frame perspective, let's go 43 days out because we are selling the premium. So in this case, let's make sure we sell some put options. Right now, stock is at 433. So we could go around, say, um, 20 delta, or even we can go a little higher. Let's say, let's go to 30 delta here. 30 delta will put us to 375. So we can sell a put spread here at 375. And what we buy back, let's go all the way to maybe 20 or 15 delta. 15 delta is good, 305. Let's go to 305 and buy a 305 put. Okay, we got our 305 right here. So we are we are bringing in $25 or so. Let's close. All right, so, and because volatility is high, you could also sell some premium on the call side. So what we'll do is we'll go all the way. We have to be a little careful when it comes to Tesla and selling some premium on the call side. So what we'll do is we'll go all the way here. Let's go to 20 delta, which puts us into 720. We'll sell 720 and buy 800. So that way it will give us some good coverage. So we are selling 720 and we are buying back 800. All right, so we are collecting about $4. It's not too much on the call side of the house because stock is going up. All right, so that's done. So what we'll also do is we'll try to see, as when volatility can decrease a little bit. So for that, uh, let's go into a little bit in the future. Let's see around 1029. Let's see if we have volatility going down a little bit. So October 29th. So let's look at Tesla chart as it's buffering. Okay, so chart is still coming up. Give it a minute. So as you can see here, Tesla volatility is coming down right now. So this could be a good position to initiate some bullish or calls bullish or long call spreads. Let's see if we can do that. For that, we'll typically go at least 90 days out. So 113 is good enough. And let's look at call side. We'll go somewhere close to in the money. So right now stock is at 411. I think 400 could be a good one. So we can go to 400 and initiate a vertical here. And since we are bullish on this stock, we can go all the way to 500. $100 spread. We are paying $35 for this spread, which is good enough. Okay, done. So what we can now do is we can go back to our trade tab, monitor tab, and see how is our put that we sold in the past. So we got one more date left. So this put vertical I think we made around $2,500. Let's go ahead and close it out and take $2,500 profit. Good. So next we have a call vertical that we sold. We are a little bit cautious about this because Tesla is going up. Looks like we still made $379. Let's close that out too. This is taking it. Let's go back here. Looks like we didn't choose the right one. So yeah, right here, this one we want to close out, which we made $482 profit. Let's delete this and close this out. And let's pay maybe 10 cents just to close this out. Sometimes Thinkorswim will not close. Okay, good, we got that close too. Now let's look at what we have. So we got February, December 20th, and January. Let's go to December 20th and see if we can close this put out. So that's the December 18th right here. All right, when it's coming up, let's look at the chart and see how the chart doing. So we are in December 18th. As you see here, Tesla stock went up, which is a good sign because we sold some put options around when it was a little bit higher. So let's go ahead and see how is our put option doing. December 18th. So this put vertical that we sold, I think we made around $1,200 profit. Let's go ahead and close that out. And now we got February and January two calls, and we have one more call here, call vertical. Let's go all the way to December 30th and see how much profit or loss we made. In the meantime, when it's coming up, let's go to chart and see the chart here. Looks like chart is, price is going up. At this time, there was some news about Tesla joining S&P 500. I think it's a big news which made the stock to go up. With that, let's go back to monitor tab here. Looks like this vertical, the call. This is actually the call that we sold. This is at least making some profit, which is good. Let's close this out. We are a little hesitant to sell this call because Tesla was going up, but still we could make some money out of this. And next is our call spread that we made. This is a $50 wide spread, which is making around $2,700. Let's close that one out too. And the last but not least is a $100 spread that we sold. We are making about around $5,800. Let's close this out too. All right. So what did we learn from this session? So what we learned is really when the implied volatility is high, somewhere if you see here, we sold a we basically sold a put spread and also a call spread. Put spread lower price, call spread at a higher price. And when volatility came down somewhere here, we basically bought a call spread for $100 wide. So in both scenarios, when volatility went up, sell some premium. When volatility came down, basically buy a long call spread. Both made money. So the key takeaway is really when volatility is high, you can sell premium. We basically sold premium on both call side as well as put side. And when volatility is low, you can basically buy long call or long call spread. We did that too. So don't do other way around. Always when its premium is when volatility is high, sell premium, and also have some spread, because spread will basically limit your losses and limit your risk. And when the volatility is low, go ahead and buy either a call or a call spread to limit your loss. Thank you very much. Hope this helps. Happy trading.